Okay, we're gonna do our update on the broader markets right now. It's July 22nd, Friday. It's just about 1:45 p.m. So we've got about 2 hours left of trading, and we had a pretty violent bearish reversal, basically within the first 30 minutes of trading today. And I'll drill into the 15-minute candles just to show you here. This is SPX. And this is just kind of classic understanding price action. So this was your first candle of the day, your first 15-minute candle, I should say. This candle I'm looking at here. So it was green, and then your next candle made a high and then failed out the other side. That is a bearish outside candle. Now, I talk about multiple time frame analysis all the time. That's what this is, right? This is going down to the micro level, like if you were day trading. I think there's way too much noise at this level, but the principles still completely apply. So this bearish outside bar, we got a little bit of a revert, like we got a little bit of a low made here. This was your higher, your lower high, right? Well, I guess this was your lower high, like this little bear flag here. And then you spilled over again, consolidated a little bit, then down, consolidate, then down. We're consolidating now, I suspect, for another move down. You would think that we're going to kind of sweep this area here is what this looks like to me. Like we fill this out and then dump here and then then on. But I'm not focusing on like exactly specifically today, obviously. I'm trying to get a sense of the bigger picture. So on the daily chart, today is day 23. And the same way that bearish outside candle formed on the 15-minute, that's what we're about to do on the daily. I hope you're understanding this. This is super important. This is the alpha, right? That's how this works. That's why multiple time frame analysis works. That bearish outside candle on the 15-minute time frame is now cascading to the daily time frame. So now it's a question of, are we going to get enough downside momentum to complete the pattern? That would mean making a low below yesterday's low, which was 39.2764. Right. So that's what you would expect. You'd expect that we come down and make this low. If we can't, that's a good sign of strength, right? That tells you something too. That's an important thing to know about as well. But it's also possible we could get that continuation on Monday, right? To kind of close the deal. So important to understand what's happening here. This is not the best picture. And being that it's 23 days into the daily cycle, this previous one just bottomed out on day 25. It could be that we're getting close to a top. Again, remember, we have the Fed meeting coming up on Wednesday. We're going to have the announcement on Wednesday at 2 p.m., July 27th. I expect that's going to be an important pivot point. My expectation was a rally into that number, and then that creates your swing high, and then we begin our descent. But we'll see, we'll take the price action as it develops. The other thing to keep in mind is that the cycle before that was 54 days. So like these things can stretch really long. And you can also kind of think of this cycle here that was 25 days. And then this cycle here as almost like two mini cycles that make up one bigger cycle, right? So thinking about it that way, that would make this day 48. I hope you're following, right? So if you just took this count of 25 and you just said, let's call this a mini cycle, and this is the second phase of that mini cycle. So from this, if we just kept counting, this would be day 48. And so you would still expect the daily cycle low sometime within the next 10 days, right? Considering this one bottomed out on day 54, and it was fairly long in that case. They're usually more in the 34 to 40 day range. You can see them here. So that's important to be aware of. Again, the actual counts themselves, they're obviously not magic. It's really, at the end of the day, a question of price action. And on the weekly time frame, this is week 21. This candle looked much nicer earlier today, like literally like at 9:30. It looked much nicer after that big reversal. We're now flirting with the prospect of actually closing below the 10-week moving average, whereas we had burst above it. And this is the important thing here. We have a swing low in place from week 16, this candle here, right? That is the week of June 13th. That swing low is active above 38.43 because that's the high of this candle right here. And so we're still way above that level, right? Obviously, but That's an important level to understand, to know we could see a back test of that level and then a bounce off of it, for instance. That would be your best case scenario for bulls if we start to see more downside over the next couple days, something that maybe like weakness into the FOMC meeting even. So that's an important level to be aware of. And this weekly cycle is interesting, right? Because was the 16th the weekly cycle low? If it was, it would be the shortest weekly cycle in the last like 10 years, basically. You know, if you go back, I mean, like at least on this count, let's say going back to 2015, so call it 7 years. You know, the shortest cycle was like 17 weeks, and that was an anomaly. They're usually more like 21 to 25. And the one before this was 20, so it was short. So it would be strange to have a short cycle and then another short cycle. Anything could happen, to be sure, but that gives you the prospect that this is actually going to develop to be a bear. This is actually going to end up being a bear flag, right? So this becomes a bear flag of this whole decline here, and then we spill over, maybe finding ourselves at that 3,200 level, maybe we spill over, bounce, and then we find the 3,200 level. That's probably more likely. Maybe if we do get another leg lower, like let's say that this weekly cycle actually goes to week 25, right? Like let's just play hypothetical. That's always helpful to kind of to just kind of hypothesize. So let's say this went to week 25. So that would be August 15th, right? So the week of August 15th, I should say. So you can imagine, right? Like if we continue lower here, like let's say we get a little bit of a bounce into the Fed, and then we kind of sink. You could see a world where we do something like that, and then that like the next weekly cycle takes us down to the 3,200 area, but we'll see. We're not fortune tellers, of course. And so that is the picture for the weekly cycle. And if you think about the monthly chart, really important to note, we're going to want to see a monthly swing low. That's what's going to tell us that a long-term cycle low has formed. Something like what we have for Costco. I'll pull that up. So this is a Costco monthly chart. And so you can see a very clear swing low. So we had an inside month. And then once we broke above 491, which was the high of that inside month, which was June, we had a swing low. And so this is indicating Costco may have made a major bottom. Now, certain stocks tend to bottom before the indices. It doesn't necessarily mean we are close to a bottom, but it's helpful to kind of understand this is the kind of pattern you would look for in the S&P and all the indices, really. And you want to see that on the monthly level. You want to see that on the higher time frame. And so we're probably going to remain an inside month this month, right? And this is month 28 of the 36-month cycle. And then maybe we get that bounce the next month, right? So next month we get that swing low. That doesn't mean we're out of the woods, right? We could stack that, most likely just ends up being a lower high, right? So like you imagine something like that, and then we make our way, we kind of make our way lower over the course of the next 8 months or so, like into that 3-year cycle low. And so that's the picture for the S&P, and very similar for the other indices. I say QQQ is notable in that it's actually much closer to making a monthly swing low. Like if we were to get a little bit more of a thrust, it's $15 away from a monthly swing low. Obviously, we'll have to see how we close today. Do we get a bullish reversal to create some upper wick, or lower wick on the daily time frame? This is the daily chart for QQQ. We're on day 24. So the Qs actually have already basically made, So the Qs have already completed the pattern. They have made a bearish outside day. I hope you're following, right? The low from yesterday was $300.78. Low from today, $300.42. We've bounced off of that, of course, but we have pierced the low from yesterday, and we also had made a new high above the low. So that's a bearish outside day. It's not a good sign. It's also called a fake breakout, right? Because it means we made a new high, price could not sustain. There was a ton of selling pressure, a ton of supply, And so this may be our daily cycle top. We may be starting the daily cycle decline. So that's something we'll need to be aware of. That's important to be aware of. And for the Qs, this is month 8. This is week 18. The Qs also have a swing low. That swing low was actually on week 13, whereas the swing low for the S&P was week 16. And for the Qs, that swing low level is approximately 287. So that's interesting. So you've got about $15 to the upside, 15 to the downside. That's what you call not a good risk reward at all. You want your downside risk to be smaller than your upside opportunity. And the monthly, very similar. I mentioned already. It's closer than the S&P, and that's what we're going to have to watch for. We probably do get that monthly swing low next month into August, but we'll have to watch for sort of early failure, kind of failure to launch, if you will. And finally, we'll look at IWM. So IWM is a very similar count to QQQ on the daily. So also day 24, and just like QQQ, IWM has completed the pattern. It made that new high today, had the violent reversal at around 9:45, and now you have made a new low. So the S&P is leading the other indices in terms of like the other indices are weaker than the S&P, and we do seem to be getting a little bit of a reversal as I speak right now. And IWM week 21, just like the S&P, and for IWM also we have a swing low that was established from week 16. And so we're going to be watching really closely to see, does this swing low hold? It could very well be that we're in a new weekly cycle. That's not necessarily bullish, because it could mean that this is just a new weekly cycle that's going to have an early high, right? Like this weekly cycle topped out on week 5, right? This is actually, if this is a new weekly cycle, this is week 5. So that would be quite ironic if we had successive, week 5 tops. Very interesting. And I will turn over to TLT really quickly just to kind of contrast that. I posted a separate video about TLT. That was from earlier this morning. That was actually before the violent reversal for the S&P. Interestingly enough, we're actually holding. So I am expecting a gap fill. You can see this kind of gap area. This thing is just kind of consolidating up here, which is essentially a bull flag, which is interesting. You really have a possibility that this day 24 is your daily cycle low or daily cycle high. That said, this is still a very bullish signal, this monthly swing low, and it's another example of what you want to see from the S&P, right? You can see this is the candle that marks the low. This is the high of that candle. This candle has gone above that, and this is on the monthly level. But again, because of all of this downside, what you probably, just to kind of help you conceptualize, you had this big downdraft, then you had this lower high, now you have this lower low, you're going to have a lower high most likely, and then you're going to have a lower low. And then it's a question of, when does this pattern stop, right? You could have a bounce for even a couple months, right? This bounce lasted all 9 months. So it's something that it's really important to be aware of.